I talked about Spark coin last week and it started peaking in views. Then I got a comment saying, it's the worst coin at the moment. Well, I will love to talk about this and also talk about the seriousness on this project. But first, let's get to understand why Spark coin was surging in the first place. Spark coin is at 10 cents, which is up 23% in 24 hours. Volume is $458 million, which is a 223% increase. Market cap is $110 million. The 7-day change is minus 33%, so there's a recent rebound after a big drop. Looking at the technical analysis from the tools, the 7-day SMA is 11 cents, 30-day SMA $0.056, so current price is above the 30-day average. MACD line is above the signal line, which is bullish. RSI around 54 to 57, which is neutral, not overbought. Fibonacci retracement levels show support around 6 cents to 15 cents, with the current price near the 50% level. Pivot point at 9 cents, so price is above that, indicating bullish momentum. News mentions a recent crash of over 50% from peak, but then a rebound. There's a lot of talk about staking inflows increasing, TVL up to $4.72 billion. However, the price crash was due to airdrop sell-offs. Now, the recent surge might be due to reduced exchange supply tokens moving off exchanges, which lowers selling pressure. Also, Binance added Spark Clash USDC trading pairs and trading bots, which could increase liquidity and trading activity. Another factor is the upcoming token unlocks. There's a major unlock in June next year, but daily unlocks are 4.65 M Spark. However, the recent price increase might be due to short-term traders anticipating a bounce after the steep drop. Technical indicators like MACD and RSI support a bullish reversal. Also, the market sentiment is greed with a fear and greed index at 63, which is neutral but leaning positive. Altcoin season index is low at 34, so maybe some rotation into SPK from other alts. So putting it together, the price rebound is likely due to technical factors: oversold bounce, MACD bullish crossover, reduced selling pressure from exchange outflows, and increased trading activity from Binance listing new pairs. However, the longer-term concerns about token unlocks and dilution remain, which explains the volatility.
This is the Spark liquidity layer, and this is what Spark is. What we launched at the end of last year, called the Spark liquidity layer, is now scaled up to $3.7 billion in capital that's been deployed. We've really been able to tap into new markets that we used to not be able to access in just sort of the DeFi-centric environment. So Maker was historically constrained to over-collateralized crypto lending, like ETH, LSTs, and then various wrappers on Bitcoin. And so now we have new products that are accessing markets like, for example, the Coinbase Bitcoin Whirl product that was launched by Coinbase at the beginning of this year. We're supplying 82% of the capital into that. And then that's a new market that we're able to tap into pretty uniquely within the space. Additionally, we're also deploying into Maple. A lot of the TVL growth there is actually us ramping that up because, you know, as people who own Bitcoin, we see a lot of growth in the price of Bitcoin. Not necessarily everybody wants to wrap Bitcoin on Ethereum. You know, maybe they're Bitcoin maxis, maybe they're institutions, they don't like touching smart contracts yet. It's fine. I think our goal is to cater to all these users exactly where they are. So through products like Maple, we're able to deploy capital such that institutions, BTC holders can access loans. It's the exact same sort of structure that we have on chain, but they can use their favorite qualified custodian instead of on chain, which is perfectly fine. So we've really been able to expand the balance sheet of what we can access for the past couple, it's even just been months. Like, it's crazy how fast it's scaling. So this is the Spark liquidity layer, and this is what Spark is.